This massive display board and the chaotic crowd of traders reflect the traditional barrier to entry in the stock market. If you feel overwhelmed by the sheer volume of data and noise, your intuition is correct. We are going to simplify these mechanics into a single, actionable blueprint. By the end of this video, you will have a personalized, step-by-step trading plan ready for execution. To build this correctly, open a blank document, a spreadsheet, or a physical notebook right now. You need to document every step of this process. Welcome to WealthWise USA. Smart money, better future. Let's start the plan. Preparation is the only antidote to market chaos. Trading without a written plan is gambling. Step 1 is setting your capital rules. At the top of your document, write down the total amount of savings you have available. Now, identify your non-negotiable funds. Subtract your emergency savings, rent, essential monthly expenses, and any high-interest debt payments from that total. This remaining figure is your absolute maximum trading limit. This creates a hard financial boundary that protects your essential living funds. Your primary objective at this stage is surviving the educational learning curve. Protect your capital so you have the time to gain experience. Step 2 is securing your brokerage. Compare different platforms based on their fee structures, research tools, and the quality of their customer support. Filter your choices until you find a provider that offers a paper trading or simulated account option. This feature is mandatory for the building process. Paper trading provides experience with the functional mechanics of buying and selling shares without risking any of your actual capital. Testing your strategy with virtual money is the only way to prove your readiness for real market risks. Step 3 is drafting your rules. Write down 3 questions you must answer before every trade. Where will I enter? Where will I exit if I am wrong? And how much am I willing to lose? These answers dictate your position sizing. By using tools like stop-loss orders, you ensure that a single bad decision cannot destroy your entire account. This wall of numbers shows why tracking the entire market is impossible for a beginner. Select only 2 or 3 specific stocks or ETFs to study and track exclusively. Defining your exit strategies before you enter a trade replaces emotional panic with a repeatable, mechanical process. Step 4 is mastering your order types. You must understand the 2 primary ways to buy a stock: market orders and limit orders. A market order prioritizes speed. It executes immediately at the current price, which often fluctuates. A limit order prioritizes price. You specify your maximum or minimum price, and the trade only executes if the market meets your exact terms. Be aware that market orders carry higher risk during periods of extreme volatility, as the final execution price can differ significantly from your expectations. Understanding these order types gives you control over the exact terms of your market engagement. Step 5 is creating your trading journal. Draw a 5-column table in your document right now. Label your columns: date and ticker, why I entered, where I exited, what happened, and what I learned. This log helps you avoid common pitfalls like revenge trading. Increasing your position size to win back a loss is a mistake that turns a small setback into a catastrophe. A journal acts as a mirror, transforming random market outcomes into actionable data about your own decision-making flaws. You have now completed your written action plan, established a risk strategy, and configured your simulated account. Your immediate mission is to use this documented plan to execute 10 paper trades over the next week. This will build the necessary muscle memory for real trading. Avoid using excessive leverage and ignore anyone online promising guaranteed, risk-free profits. These are traps that lead to rapid capital loss. Real money introduces real fear and greed. Adhering strictly to your new plan is the only way to manage those emotions when you eventually transition to live funds. Success in the stock market is the result of education, patience, and the discipline to follow the plan you built today. Smart money, better future. This is WealthWise USA.